Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. Today I want to talk to you about Dropbox. Ticker symbol is DBX. I'm very bullish about this company. I think this is one of those companies that I'm going to start heavily put more position into my portfolio. Hopefully you like this video as well. Please, if you do, give it a thumbs up. Again, if you are new to investing and you want to learn about what kind of stocks are great, whether it's dividends, growth stocks, you've come to the right channel. Hit that subscribe button. Do me a favor and hit that like button as well, as it helps the channel grow. As always, please remember that this is not a financial advice. This is just me sharing the companies, the stocks that I'm thinking, what I like. However, if you are ready to start your journey in investing, again, follow me, hit that like button, hit that subscribe button, and let's do this together and make some money. With that said, let's take a look at this company called Dropbox. Again, the ticker symbol is DBX. It is a company that allows individuals, teams, and organizations to collab. So basically, it is a software company where you can communicate via email on collaboration. So let's take a quick look at it. So in 2007, it was a cloud storage keeping the files. So today it's more of just collaborating using the apps, as you can see. Now if we go down to today, so they are a business software that defines traditional boundaries. So now if we look down to some of these stats, you can see on this one, you can see there's about 600 million registered users with about 80% subscribers used for work. And I think it even goes even further across 180 countries. So there is a lot of people using this company. I think as we go on, it will continue to increase. I think it's just a matter of time, in my opinion. Now, if we look further down to the ecosystem, so if you look at the ecosystem, it is pretty much impressive, in my opinion. So here is the Dropbox. As you can see, it branches to many different companies, even Slack. So Slack is kind of like similar to it, but not quite. But if you look at it, every one of these, like like Zoom, you got Microsoft Office, you got Salesforce, you got Adobe, you got IBM, you got Oracle, DocuSign. So everybody is kind of like involved in this company one way or another. Again, it's 100 million active registered developers, 85% of active paid the team. So there is a free subscription and there's also a paid subscription. So now if we look down to the infrastructure, you can see it's pretty much expanding to the other parts of the world in this way, in Europe as well as Asia. So now, they talked about the growing drive to innovate and execute. Now, if we look down to, some of the features of it, you can see, they talked about how you can just transfer things easily, whether it's large files. And then if you look down, it also saves passwords from different platforms like Facebook and Netflix. So now you can also have vaults where you can do your taxes in there, secure passports, and then, you could back it up on PC or Mac. So there's a lot of features that goes with this software. Now, let's take a look at the Yahoo Finance. As you can see, the market cap is 9 billion with the 52-week range. The high is 24. So at the time of this video was up $23, so it's going to definitely hit that. If you look down to the performance outlook, it is a bull. Now look at the earnings. The earnings is 4 beats in a row, so that's something that I also like to see. If you look at the revenue, you can see the revenue is steadily increasing. Earnings is just kind of up and down. So, but again, it is increasing. So this is a great way to see that it's eventually going to be profitable at some point. The trends are kind of mixture between holds and buys and strong buys. Currently, right now, the price is between the it's still under the average, so that is pretty good. Now, let's look at the balance sheet. Some of the stuff. So profitability, profit margin is 4%, operating margin is 3%, return on equity is 10%, return on assets is 1%. If you look down to the balance sheet, you can see total cash is 1.3 billion, total debt is 1.2 billion, current ratio is 1.29, and then if you look at the cash flow, operating cash flow is 586 million. Leverage free cash flow is about 431. So now let's take a look at TipRanks. As you can see, their forecast is to go, and the target is 28 with a 20% upside. So if you look at the high would be 30, average is 28, and the low is 25. So in my opinion, it's going to hit that 30 at some point in the next couple of months. Their rating is 4 buys and 1 hold. Now, if we look at CNN business, let's go see how they're looking at it. For same thing, that the high is 37, medium is 29, and the low is 20. Their analysis recommend it's kind of like a mixture between a buy, hold, underperform, and a sell. So there is one sell in there. Now let's take a look at bar chart. As you can see, for bar chart, they recommend a strong buy with 6 analysis rating and a strong buy. If you look through the chart, you can see for the past 3 months it's been a strong buy, and strong buy. So they are in favor of this company. If you look down, nobody's saying to sell other than 1 hold. Let's take a look at Nasdaq. So as Nasdaq, they also recommended a strong buy, but there were 4 of them that said it, and these are the firms. Their price target, it was in the 28, again with the high of 30 to 28 and the low of 25. So if you look at all of them, it's kind of similar in terms of the high, the average, and the low. I agree. Like I said, it's going to probably hit 30 in the next couple of days. That's in my opinion. Now, if we look at SimplyWall, you can see some of their summary is that it's trading at 16% below estimated value of its fair value. It could become profitable this year. Some of the risks that you're going to have to consider is the forecast, earnings to forecast to decline. Now let's take a look at Robinhood. As you can see, Robinhood has its 67% of the analysis rated as a buy. So at the time of this video, you can see it was down 0.8. For the week, it's down 1%. The month is up 27%. 3 months, it's up 25. For 1 year, it's up 36. And then for 5 years, it's down 18%. So this recently IPO'd a couple of years ago, about March 23, 2018. So it's fairly kind of new. So I did buy 2 shares. Again, slowly putting my positions in there. If I see it closer, I'll buy a couple more. I try to do a lot of dollar cost averaging. I don't want to go put in like 100 shares right away. I try to build it slowly, try to get the best dollar cost average in my opinion as I can. My target on how many shares I'll probably get is probably between 50 to 75. So that probably is within my share. Again, I like my priority is dividend investing. However, certain stocks such as this one is something that I'm going to put aside and be like, okay, you know what, I like this company really well. I think it's awesome. I'm definitely going to put in my hard-earned money. So total return right now is 0.4%. I'm not worried about it. Again, this is a dollar cost average strategy. I'm going to put a little bit here, a little bit there with my target of amount of shares. If you look down also, for Robinhood, you can see sometimes some of them have those research reports. So you can see the fair value is $15. That's based on Robinhood's, you know, assessment. So if you do have Robinhood, definitely go and check that out. Take a look at it. So that's something that you can use as well to do your own research. As always, please remember to do your own research and always do your due diligence. Thank you so much for watching. Hope you like this video. If you do, please give it a thumbs up, as it really does mean a lot to me. As always, please remember to be safe out there. Stay cool. And definitely keep investing, guys. I'll catch you guys on the next video. Aloha.